Welcome, everyone, to the weekly U.S. market summary for all things money. The week's ending March 28th of 2025. This week, the S&P 500 posted a weekly drop amid tariff worries and also waning consumer sentiment. The Standard & Poor 500 index fell 1.5% this week, wiping out any previous week's gain amid worries about additional tariffs and also worsening consumer sentiment. The S&P ended the week at 5,580.94 with just one trading day remaining in the month, which is Monday. The index is down 6.3 so far percent for March. This puts the market benchmark on track for its largest monthly drop since September of 2022. The index is also down 5.1% for 2025 and also on pace for its first quarterly drop since quarter 3 of 2023. This quarter marked the start of Donald Trump's second term and has been marred by uncertainty over the administration's tariff policies and also federal job cuts. The U.S. expected to add reciprocal tariffs as well as levies on automotive imports this coming week, and the U.S. consumer sentiment has fallen 3 months in a row now as expectations slumped and the inflation outlook jumped amid economic policy uncertainties. Let's get to the charts. The S&P 500, you can see, is below its 200-day moving average, which is this red line. If we switch over to a period of 100, we can get a Elliott wave to the downside here, and you can see that it's a wave 3 to the downside. It has gone up, broken through this 10-day moving average. It is now testing the 30, which it bounced off of it, and now it looks like it's heading back down to test this most recent low. If we get that most recent low tested, we're actually heading down to the 540 area. So be aware that upcoming here, we could probably see 540 maybe next week or the following week thereafter. As you can see, the oscillator has increased here, which hopefully indicates this momentum has slowed down to the downside, but just still be cautious and keep your eyes open amid any sort of breaking news or anything like that can move the markets, New York second. The Dow or the DIA has a very similar look to it. We have kind of a higher high here and a lower high, which signals a downward movement here. We also had a break again below the 200-day moving average. The oscillator here is also showing some increased upward momentum. Hopefully that will slow this, but this is probably going down. The Dow is actually probably going down and testing probably the 410 area before it decides what it's going to do, whether it's going to break that area and drop even further, or whether it's going to go back up north. If we head over to the VIX is showing us that volatility itself has increased substantially in the last 24 hours. We have a wave 4 pattern here, and this volatility basically took a big spike today, but we also have a tap box here up to about the 30 region, which would match the highs back here from March. That indicates a potentially downward move in the stock market due to increased volatility. Increased volatility, which would basically take us up to the 30 region here, would indicate that the market has more downside to go. If we go to the bond market or the TLT, you will see a very kind of ominous pattern here. We had a higher high here and a higher low, which is creating more downward pressure because this is also below the 200-day moving average. The oscillator here is also turned negative, so expect more downside in the TLT. we go over to the QQQ, the NASDAQ, we see that there's a Elliott wave 4 and that tap box to the upside here. We're indicating probably more upward momentum if this most recent low can hold. If not, we'll probably be heading down to probably the 430 level here, kind of in this general area, to kind of see if we can find a floor and then head back higher. If we go to the IWM, cover the small caps are showing us that there is also more negative in the market. We have a bounce off this 30-day moving average and a big downside red bar here to the downside. I would suspect in the next week or two here, we're going to also test this most recent low. If that does not hold, we will probably be heading down to at least probably the region, probably around 184-ish, somewhere around here. But let's hope we can get some footing here and start a march higher. If we go on to gold, gold has been just being a rocket ship going to the upside. I foresee this going even much higher, up to maybe even the 300 area here. So kind of be aware that this is now creating a divergence here, which if you take and draw a little line here, and then you also draw a line on the upper part here, you can kind of see this kind of creates like a big open shark mouth, and this usually indicates that this is going to come snapping shut. So be aware that this could have some more downside before it actually goes back up. This has gotten away from the 10-day moving average here, and so I do suspect some selling pressure, but I would not recommend putting on any sort of gold positions to the upside. Currently, I would wait till we have a pullback to at least this green line or the 30-day moving average before you indicate or initiate any other sort of bullish gold positions. If we go on to silver, silver yesterday had caught up or taken a big leap to the upside. Today we created a higher high, but then we substantially sold off. So hopefully we can continue to the upside here and maybe even reach the top side of this tap box, which is around the 32 level. We also are seeing some divergence here, just like in gold. You can kind of see that if we create a line here and then also one up here, you can kind of see that same jaws of like a fish or a shark. So if the mouth would come shut, this is going to come down. So suspect this actually going back down to maybe test this 10-day moving average, maybe even 30 before we actually go a little higher. So just be cautious on that. Let's end today with the USO or oil, just to kind of keep this video a little bit shorter. The USO itself is kind of seeing a sideways range-bound movement. We've seen this for quite some time here. The markets don't really kind of know what to do, I don't think. But, I mean, you got about the 70 range all the way up to about the 85. So it just seems to bounce back and forth in this range. We have broken out of this triangle. This triangle did what it was supposed to do. When it broke out, it basically takes a measured move from this side of the triangle, and then will go that much higher. So it's basically kind of maxed out where it's going to be. If it can hover here and hold for a few days, maybe a week, we could maybe even see this upwards targeting in. But just be very cautious. The market is very volatile right now. It is very it kind of bipolar, if you want to call it that. Just be very cautious in any sort of market engagement or activities at this time. So if you have any stocks or any sort of things you want us to look at in the next and upcoming video for the market summary next week, please drop and leave them in the comments, and we will follow up and make them available to everybody in a video for next week. So if you like and subscribe to our channel, you can keep updates for any of these videos that do come out in the future. Until next time, happy trading and good profits within the market. Take care.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.